All right, this lecture is kind of funny and amusing, but it's so true in global macro trading. And I kind of joke with my partners at Macro Ops before we enter a trade. I say, hey, I'm fine getting into this position as long as we trade it and don't date it. Gotta cut the losers. Okay, and this philosophy is extremely important. We don't want to marry a position. We don't want to get married to our positions in macro. We never want to be this in global macro trading. Okay, we want to be more like Charlie Sheen over here. We want to Charlie Sheen out while we are exercising global macro technique. And it's so critical, okay? Because if you don't act like Charlie Sheen in markets, if you don't act like this guy, you can end up blowing out your account. So in macro trading, you are not investing for the quote unquote long haul. For 10 or 20 years or just holding on to some position for a really, really long time. You're not looking to be a proud owner of a business, and you have an idea and it's either going to work out or it's not. And then you got to move on to the next one. You don't sit in the losing positions and watch them go against you. It's so critical that you cut losers and cut things that are not working out while you're trading the global macro method. So think of macro as more like trading educated bets. You're not going to analyze the ins and outs of a business like Buffett would do and then buy the company and then never sell it and hold on to it for 20 years. Okay, you're going to be trying to assess the market, take an educated bet, get in. Hopefully it works out for you. If it doesn't, get the heck out. Okay, this is completely contrary to the investing mindset of a long-term passive investor or some guy like Buffett in value investing, where he's parking money into assets for the long haul. He's looking for yield more so than price rising or falling. So a classic conventional investor is more paying attention to the dividends, bond coupon payments, and strong cash flows. In macro, you're looking for price to go up or down. Okay, so we're looking for price to move up or we're looking for price to move down. We don't need cash every day coming into our account from a dividend, all right? We don't need it. All right, this is not what we're looking for. We're looking for price appreciation or depreciation. So the way the method will work over the long haul, what you'll see in your account is a lot of cash, making a huge controlled bet, then returning to cash, okay? Because macro is all about having strong opinions weakly held. And you're never gonna have an itch to be quote unquote fully invested. And the amount you bet on per trade can vary based on your conviction level. So how well do you like the idea? Okay, and this, along with those concepts, you're always shifting exposure like we talked about to the markets that are moving. If you're sitting in an asset and it's going sideways or against you, you trade it, don't date it, and get the hell out.